What is going on, guys? Welcome back to my How to TA series, learning to technical analysis, my process, my tips, tricks. You know, for our first video, we covered expectations, best practices, advice. The second video, we dove in a little bit further. It was kind of basic, I know it, but I'm sure you probably picked up on a thing or two, but it was how to set up and how to use TradingView, walk through some kind of starter indicators to get you started. Today, we're going to take it a step further. We're going to talk about liquidity and why that's important to know, how to trade liquidity. On top of that, we're going to kind of show you a little bit of my favorites. I'm going to do some back testing, kind of show you how this works. Might use today as a good example of what has happened. This is probably the easiest trading method, the one with the best results, the easiest to understand, the cheapest to get started on. Yes, most of this stuff you got to pay for, but I got news for you. It's not very expensive and you should be able to make a lot of money on it as long as you follow the first kind of 2 videos so far we've talked to, which segues me into the playlist is down below. Start at video 1. If you don't have the proper expectations for this, if you don't have the proper know-how, the proper trading plan started, right? It's not going to be fully mapped out yet because you don't know everything yet. I understand that. It's a continually gradual process to build your trading plan. But my point here is this is probably the most important tool in this whole series. So buckle up, take notes, sit back, follow along with me. Anything I cover will be in the description down below. Thumbs up the video, subscribe, turn on notifications, and more importantly than anything else, if you're not in Discord, discord.gg/Alpha Aere, you are missing out on some amazing TA. First 100 people that join are going to be grandfathered into any type of pay gate I do in the future. Give me a shot. Let's just jump right into the video. So first, there are 2 main types of liquidity, 2 main types of orders that you need to watch out and look for and know and understand, because there is a difference between them. They are all different levels that you need to watch and be aware of. So the first is liquidation. So I'm using Kingfisher. It's thekingfisher.io. I will put the description below and we'll talk about this a little bit more later. But here you can see this is currently active positions. Now this is on CRV or Curve Finance because this is what I was just happening to be looking at, but it can be switched to whatever coin you want. And these are current positions on the order books. So they're active positions. Sites like Trading Different here or Trading Light here, or my favorite, Bookmap, are order book. So these are currently orders that have not been filled yet that are on the books. And just as an example here, you can see as I start to slide the slider over, you can see this is liquidity. So this is the actual orders on the order book. And you can see if I zoom it all the way in, how we go up to scoop the liquidity and then down to scoop the liquidity. It's a battle between the bears and the bulls. We all know this. There's a lot more to it. There's arbitrage and funding rates and stuff we'll get into later. But in the very basic terms, this is a magnet. It's going to act as a magnet. It wants to be pulled to the liquidity. It wants to clear the order book. The Bitcoin price, this is how the Bitcoin price is made on a very, very basic level, is the 2 magnets, the bears and the bulls, the orders below, the orders and above. They try to grab that liquidity. But Aere, why are there a million different websites? Well, there's a lot of people who have different ideas, different takes on how they want to visualize the liquidity, the order books, the liquidations. It's a personal preference. My favorite is Bookmap. It doesn't mean it's everyone's favorite. Coincidentally, it also happens to be the cheapest out there. I think it starts at $9.99 or $19.99 a month for this. And that is a drop in the bucket compared to some of these other ones. Material indicators, which I haven't even mentioned, for example, can cost upwards of $150 a month for it. And it is significantly worse than Bookmap, in my opinion. There's people out there in our Discord who like Trading Different better. There's people out there who like Trading Light better. And there's many, many more that I haven't mentioned. So what it all boils down to is what speaks to you the most. Most of these have free trials. I would recommend signing up for a free trial for every single one of them and then trying to figure out which one you like best. Now, what I'm not going to do in this video is walk you through every single one. That's a whole other series, right? You're going to have to play around with those yourself. But I'm going to try to explain these to the best of my ability for you. The good news is the majority of these work the same way, where typically the brighter the color, the more liquidity is there. They all have a legend at the top. You can, adjust the scale of that. It's the same way on Trading Light, for example, right? same way on trading different. They all work the same way in that regard. All of these programs and websites have a YouTube channel. They all have a how-to guide. Pretty simple to get started. You don't need to go crazy and play around with everything. It's not like TradingView in that aspect, though some of them can be. My trading strategies tend to mesh best with Bookmap. I had the best luck with Bookmap. That doesn't mean everyone does, but personally, I do. So Bookmap is pretty simple to understand. Where the thicker the color is, the more orders there are. This is the CLB. This is the current order book. This is the SVP, or session volume profile. So it's the volume profile of the session. So we've been in, this is the range we've been in. You can grab onto the current order book, the CLB here, with your left mouse and just zoom in, zoom all the way out to see the liquidity all the way below and above us. Pretty cool. To add an instrument or a connection, you can go up here to connection. KuCoin, Coinbase Pro. I mostly use Binance. Why? Because it is literally, I don't know what it is now, 60, 70% of the total market cap of crypto. Binance is the biggest market maker out there. But you can do whatever exchange you're trading on as well. You can just add a connection here. Boom, boom. I'm not going to walk you through that. They do a pretty good job of that on their website and through their frequently asked questions on their site and YouTube channel. Now, to utilize Binance in the United States, since Binance.com is not in the US and their APIs and they're geo-locked, you do have to be behind a VPN. In my own personal experience, NordVPN does not work for whatever reason. It's kind of a crappy VPN anyways. ExpressVPN works and Surfshark works. There's several others that work. My point is, you do need to be behind a VPN, which you should be anyways, especially if you deal with crypto. VPNs are cheap. You can get like a 2-year deal for $50 or something like that. In the meantime, if that's too much money for you to invest, and I don't understand why you're investing anyways, if $50 is a lot of money to invest in your future, maybe, just maybe now is not the time for you to be investing. So how does it work and what are the trading strategies? This is not going to be a long video because this one is actually very, very simple. All these thick lines of liquidity on the chart here are resistance if they're above you, and their support if they're below us. These are sell orders above us, buy orders, generally speaking, below us. So here's how it works. The thicker the line is, the more orders, which there is a mountain graph on the side here. So if you can't visualize the colors, you can see it on the side over here. The thicker it is, the more orders they are, the stronger the pull or the stronger that magnet is. Being a day trader, a scalper, whatever. When I say day trader, that's like a synonymous word for all the different types of traders out there, right? It's a game of probability, right? It's not 100%. Nothing is ever 100% in trading. And everyone knows that, right? It's going to go up or it's going to go down. You're trying to give yourself the most information and soak up the most information and analyze the market the best you can to give you the better odds, that you have a better idea of where the market is going. It's a game of probability. Like I said, nothing is 100%. So because it's thicker down here below us, we probably should go down here and grab this, but that doesn't mean 100% we're going to. While in my opinion, this is probably the most important tool and thing to learn, it's not the only tool and thing you need to learn. You shouldn't 100% only take and enter a trade based off of liquidity, though you can. And 80% of the time, if you time it right, where you're probably going to be okay. Now, these levels, like this 28,500, for example, more often than not, you're not going to see a crash through it, at least on the first try. What's going to happen is you're going to test it. You're going to get a bounce off of it. And it may take 4, 5, 6 tries. But if there is a lot of sell pressure, if this is a news-based, sell off, if there is just so much sell pressure, if the whales are just dumping, you can very likely crash right through it. So understanding that you should get a bounce off of this more often than not, I would say 70 to 80% of the time, maybe even higher, more often than not, you are going to get a bounce off these real thick levels of liquidity, unless the sell, or if it's above us, or below us, I should say, the buy is below or the sell is above us, unless that pressure is so much, you're not gonna crash through them. And if you'll notice, if you remember the last video where we went through TradingView, this is my object tree, right? This little symbol down here. I have all my folders nice and neatly organized. I have the liquidity levels on there. I have where the liquidations start, the larger liquidations where they start. Got a bunch of other stuff on there as well, but they correspond with what Bookmap is telling me. So when I'm TAing on TradingView, I am aware of these levels and their liquidity and where liquidations start. So finding a good entry is key to executing any type of trade, whether it is a spot play, whether it is a swap, a perpetual contract, a margin position, leverage position, what have you. Now, you want to enter off of one of these thick lines of liquidity. For example, this morning, this daily flag broke down to 28,500 level. And then what happened? Those orders triggered. Those are buy orders. Those are bulls defending that level. Shot right back up. And we shot back up 2%. Now imagine you were doing 5 times leverage, let's say. That's a 10 times win so far. And if it continues to go up, that's more and more. That is one example of a million I could show you. But here it is in Discord. You know, we shot right down to it, and then he bounced up several $100s. And I called this out. I'm calling out liquidity plays all the time. You know, what you don't want to do, unless you see something else, because this is just one tool. You know, it's tough to find a position or know which way the market's going to go when you don't clear out a thing of liquidity. So when you're sandwiched in between them, you know, it's like it's not like flipping a coin because you have other tools at your disposal. But I think you understand what I'm trying to say here. But I talked about the flag breaking down. Boom. I told you exactly where it was going to go based off of all this stuff. That's how I come to these conclusions. Now, like I said, when you're sandwiched in between liquidity, it can be hard to gauge the market. There are a lot of other indicators and tools we'll continue to build off of in this series to help you. But when you jolt down to 28,500, you're at a level of liquidity. You're at a level of support. It's probable then that those orders triggering are going to push you up. That's how this works. So there's a lot of people out there who only trade using Bookmap and they're successful, or whatever liquidation or liquidity program of their choice, to where they would open up a position here, right? It hit 28,500. It's coming up. They see that there's nothing indicating that it's going to go down further because you got that initial bounce. They enter into a long position. They write it up to that next level of liquidity, whatever it may be. Now, along the way, you want to utilize things we talked about in the first video, like stop losses. You want to move that up as the price goes up, but allow yourself enough wiggle room, because Bitcoin doesn't just go up in a straight line, right? But you want to be in the profit as soon as you can while giving yourself enough wiggle room. If you get stomped out, you get stomped out. Then you wait. That's where the discipline and the patience comes in. You wait for it to lick a liquidity again, you know. However, you know, you might see something else like a flag or some other kind of indicator, but we're focusing just on liquidity today to get you that. So I personally know traders whose trading strategy is to just play the liquidity, who is to, oops, we hit 28,500, I'm going to open up a long. And then, oops, we hit this, I'm going to open up a short. And this bouncing between these liquidity levels. And then what happens when you get a breakout? Because sometimes they happen. Sometimes the buy pressure is so strong. Like, let's just take when the XRP verdict or decision got announced, right? I mean, we blew through all kinds of levels of liquidity on that day. So if you're playing these levels of liquidity and you entered off into a short and all of a sudden some news breaks or something happens, you're on the winning side of that breakout because you've been playing the levels of liquidity. And like I said, this is a game of probabilities. So when I say that this works 80, 70% of the time, that means 20, 30% of the time, it doesn't work. 20 to 30% of the time, we're going to crash through those levels of liquidity. We could have, you know, a 20% chance earlier this morning when we hit 28,500, we could have crashed through it. We didn't. The sell pressure wasn't strong. And I'm going to show you what to look for in, you know, succeeding videos after this to help you gauge that. But there is a probability that it doesn't go in your favor. However, given enough of a time period, you're going to have more wins than losses, significantly more. Next, we're going to talk a little bit about the liquidity or liquidation map. So this is actual liquidation. So if the price hits any of these colors down here, those traders are getting liquidated. Now, there is a free version of this. It is Decentrader.com. I'm putting it in the description down below. So expand it, click on it, bookmark all the stuff down there. This can also act as magnets. So if we start to trigger these liquidations, it can act like a vacuum, and we can potentially, it doesn't always happen, right? Because you hope it doesn't happen, but they can start getting sucked up. Now, Decentrader only shows you for free the shorts, the longs that are 3, 5, and 10 times. On another site that I use, and it's my personal favorite, the Kingfisher.io. Again, links are down below. This site gives you so much information. It should be illegal how much information you can get out of this site. Not only can you get the liquidity, all leverage, not just 3, 5, and 10. You can see the current order books, but on top of that, you can see the deltas, the spots, the market maker spots, whales. You can follow so much information here. It's ridiculous. Perps, spots. This is an expensive site. That is the downside to this. I don't remember the price, but I believe it's like a few $100 or a couple $100 for 3 months. And then to subscribe to some of these players, get some of these charts, you do need to pay them a monthly fee. That's not that expensive, like 0.00050 BTC for a month or 0.0048 BTC for a year. You can make your own charts here. So you can actually make these charts yourself. That's getting a little more advanced. So that's the downside here is, yes, this is a more expensive site. One of the more expensive ones out there. However, it is, in my opinion, and it's not even close, the best. If I had to use one tool out there, it would probably be Bookmap. If I had to pick a second tool, it's going to be Kingfisher.io. So I'm going to go over the CVDs and the deltas and the buckets and stuff in the next video. For hopefully tomorrow I'll get that out, or sometime before the weekend, hopefully. But what we're focusing on today is leverage. So as you can see, we're the leverage here. This is all leverage. This one's CRV. So if we actually, let's just switch this. You can switch it to whatever you want, but let's switch it to BTC. We're gonna give it a little refresh here because that's how this particular one works. And you're gonna see it's gonna load the Bitcoin leverage. So you can see where the thick levels of liquidity is. So the market's being heavily shorted right now. That means up here, so the orders that are ahead of the price are your shorts. The orders below us are the longs. There's a lot of both, but it's being heavily shorted. I mean, all the way up from 30, 49K. Congrats to those people. Holy crap. They're making a lot of money right now. But you can see all the liquidity, where it starts, where it begins. You can see there's not much. I mean, really, 29,334. 29,334. Let me show you something. This is insane. I published this in Discord. I said, we need to flip 29,340 to support in order to continue up. We did not do that. I didn't even know at the time that 29,340 is where some short liquidations start. So you can see how these act even on the liquidation side. So it's not just about the order books. You got to kind of put both and get both in your mind. Map them both out. When you sign up for the Kingfisher, the bazaar is right here. You can spin and win some stuff. Look, I got to spin. Let's see what I win here. You can get some credits and stuff like that. Didn't win, but I forget to do that every day. So if you go to the bazaar up there, this is where the default templates are. These are all free. This particular one I'm on is free. You still need to sign up for Kingfisher, but you don't have to pay for this template. This is the order book, the GEX, and liquidations. So you got the order books flying off here. You got FTX, Binance. You can change that, which I should. But anyways, Binance, Bitstamp, you can change. This is all highly customizable. You got your futures orders over here, spot over here. You can see where the orders are, where the thick levels are, and then you get it over here as well. Then you got the GEX Plus here as well. And GEX is a pretty cool tool. So GEX Plus measures how market makers, who are people who make a lot of trades, they're the whales, right? They are the exchanges, the Alamedas out there, are affecting the market. A high GEX Plus number means that the market makers are keeping things calm and prices are not changing much. A positive GEX means that dealers are providing liquidity to the market when the spot price moves, stabilizing the market. A negative GEX means that the dealers are taking liquidity from the market when the spot price moves, destabilizing the market. And you can look into this more for yourself. That's what you get on this particular template. And like I said, there's a bunch of them. You can make your own blank template. They have a lot of stuff on here. I mean, there's so much you get to play around with this. Liquidation ratio, liquidation map. You got a heat map, which is a great way of understanding the market's liquidations. This is a view, right? Let me see if I can pull this up here. Let's back out of this. Let's zoom down. There you go. This is looking more like, as you can see it there. Can you see it? Yeah, you guys can see it here. And you can zoom this all the way in. This is looking more like that trading light, trading different din. So this is what I'm saying. Kingfisher.io, best site out there. Worth the money. It really, really is. And I don't have an affiliate link with any of these guys. I don't make money off of pushing any of this shit. This is just what I use in my day trading, in my scalping, in my swing trading, in my spot plays to make money. So you want to map out the liquidations the best you can. Don't get too carried away. I would just map out where they start. So the 3, 5, and 10 on Decentrader I put on there. So that 28,600, the 31,800. So you know that's going to be defended, or it's going to attempt to have been defended. And then here, like I said, this is back on CRV, but with Bitcoin, it was at that 28,400, wherever it was. There was a little gap between us. So you want to put your trend lines on Trading View where it starts. So for me, 28,800, we just talked about on Decentrader, and 31,800. You want to do the same for Kingfisher with all liquidations as well. I think that's it. I think I got everything I wanted to get across today. I gave you a bunch. There's like 5 options in the description below. We talked about Kingfisher, Decentrader, trading light, trading different. I showed you the strategy. I'm gonna replay through it once again here. So the strategy changes. You need to know that liquidity changes. It changed today. There is something called spoofing orders. So let me pull up Discord here again for you. So look how today the price started moving up, and then all of a sudden 29,500 disappeared. They didn't get cleared out. Those orders just disappeared. So while spoofing is illegal in the traditional finance markets, it's technically illegal in the crypto markets in the US as well. It happens because crypto is global. So what can happen, I want to stress that word can happen, is people can put orders on the order book on Binance or wherever, MEXC or KuCoin, and then they can manipulate the price up and down. So they can throw a shit ton of money up there, right? At 29,500. I'm not saying that's what happened here. And then they can pull it as the price starts going up. So people can manipulate the price. Orders can leave and come. Liquidity levels can leave and come. Support and resistance levels can leave and come. So that's why you need to always be up on this. Have your trading plan, follow that trading plan. Hey, I'm not going to enter in a trade until I map out the liquidity levels, until I know they haven't moved, etc., etc. And then, guys, it gets really, really simple after that. Again, the strategy is enter in position off of these lines, trade it up to the next line, bounce back between them. That's the simple strategy. The more advanced strategy is you put everything you've learned all together and you make an informed decision on a trade one way or another while sticking to your plan, being disciplined, and having proper risk management. That's it. That's all I got today, guys. If you have any questions, drop them down below. Hop in Discord if you need something explained further. I hope I got my point across and made this real simple for you. I gave you some things to look into, and some strategy and how they are used and how they can be manipulated at the same time, and why you need to pay attention to liquidity and liquidations and the order book. Appreciate you guys for watching. Hop in Discord, like, comment, subscribe, and I'll be back for another one of these. This is part 3.